Hello, my dear students. A very warm welcome to all of you in Shri Jain the Rank Zone. I am your friend and mentor for the subject Business and Commercial Knowledge. In this lecture, we'll begin with Business Chapter 6, that is Common Business Terminologies. All the concepts will be covered in the coming series of lectures. So let us begin. This is lecture number 1, Common Business Terminologies. We'll begin with the learning outcomes. After studying this chapter, you will be able to familiarize yourself with the growing lexicon, the vocabulary of business and commercial knowledge. Define the terms used in the areas of finance, stock, commodity markets, marketing, banking, and others. Relate better with the terms in business, economic newspapers, and magazines. Use the BCK terms in your academic and professional conversations and communications. Let us continue. Overview of the chapter. Common business terminologies of marketing terminology, banking terminology, other business terminology, and finance, stock, and commodity market terminologies. Introduction. The domains of business and commercial knowledge (BCK) are ever expanding and evolving, and BCK draws its vocabulary from various disciplines. In the first chapter, we spelt the strategies for keeping oneself updated with the BCK, business and commercial knowledge. In the preceding chapters, we have drawn on BCK lexicon for elaborating various concepts. In this summing up chapter, we profile the terms used in those chapters and many more in BCK lexicon. The format of the chapter is more of glossary, that is BCK dictionary. However, we learn better when we contextualize these terms and use these in our conversation and communication. Thus, we encourage you to read more, think much, and write and speak these terms for better comprehension of the world of business. This is help you in the future. Business, many facets of the same reality. In chapter 1, we also saw that how a business may be studied from a technical, that is production or operations, commercial, marketing, economic, financial, social, HR, and political, legal, and administration perspectives. Each of the perspectives may be regarded as different windows of the same room. For a holistic awareness of business, we need to know about all the windows. A bit depending upon our needs, we may just open one window at a time. Recall, we called business as an electric field of the study. Perspective and reality of business. Perspectives are useful, each one of the own right. However, we should not be blinded by our own expertise. For example, to an accountant, the firm is just a little more than a sum of assets and liabilities, capital, revenue, and expenses. And to a marketing professional, it is all about firm's products, pricing, place, distribution, and promotion. In reality, however, the firm is both an accounting entity and a business that is marketing its products. We need to follow an eclectic approach that is not blinded by or blind by any of the perspectives. All these perspectives have a lexicon of own, the jargon, that is special words or expressions that are used by a particular profession or a particular group. Let us move ahead. The next is technical facet. Technically, a business may be viewed as a transformation process, a huge machine wherein inputs are subjected to the entire process of generic output. Now, this interpretation of business can open up to a host of the terms in the BCK lexicon. A business unit, a business inputs are the various commodities including industrial, raw materials, minerals and metals, as well as agricultural commodities, especially for agro industries. It is therefore desirable to know about terminologies pertaining to commodity markets. Commercial facet. Commercially, business is all about marketing management. That is, planning, organizing, directing, controlling a firm's relationship with its customers and markets. Essentially, it comprises the famed P's of marketing: product, four P's of marketing: product, price, place, and promotion of goods, and marketing of the additional P's of people, that is, the workforce, sales force, connect with the customers, the physical evidence, etc. Example, hygiene in a hospital or a restaurant and processes. Example, customer service time, queue management, etc. for service marketing. Here, the BCK would also involve the awareness of terminologies pertaining to consumer market, domestic as well as international. Financial facet. From the economic, accounting, and financial perspective, business implies investment and the associated returns and risk. Thus, the facet includes sources of business finance and the state of the development of financial markets, maintenance of accounts, preparation of profit and loss account and balance sheet. It involves estimation of cost, revenue, and profits, and periodic reporting of the firm's performance. HR facet. From an HR perspective, a business organization is all about people occupying different job positions, and performing their respective roles, responsibilities, and functions. People are said to be an organization's most precious assets, albeit these assets do not do no figure in its balance sheet. Their competencies, character, individual motivation, collective morale are believed to have a decisive effect on the organization's performance. Thus, all the organizational processes and the associated vocabulary of attracting and retaining talented, energetic, enthusiastic, and ethical human resources is also an integral part of the BCK lexicon. The next is administrative facet. Administratively, BCK pertains to the forms of business organization, regulation, approval and clearance needed to start and to carry on businesses. It also refers to internal management and governance processes. The above mentioned perspective might enable you to identify and place the BCK terminologies within a framework. Feel free to encourage to read and to make sense of the reports in business newspaper and magazines. It's quite possible that you will come across many terms not mentioned here. Be advised to prepare a dictionary for yourself. What is even more exciting is the use of signage and symbolages in business and commerce. Sign language and symbolage in business. International packaging symbols are given over here. Fragile handle with care. This way up. Use no hooks. Protect from heat. Do not stack. Heavy. Do not lift. Sling HCRC. Keep dry. Stack limitation in units. Center of gravity. Do not roll. Stacking limitation. Weight. No hand trucks. Clamp here. Temperature limitation. Other commonly seen signs. Danger. Highly flammable. Radiation risk. Static sensitive device. If packing is reused, delete all old rings. Food distinction symbols. Veg, non-veg. Veg is in green, non-veg is in red or brown. Universal Product Code. The Universal Product Code UPC is a barcode symbology that is almost universally used for tracking trade terms. It consists of a scannable strip of black bars and white spaces. Above, it consists of a scannable strip of black bars and white spaces above a sequence of 12 numerical digits that is uniquely assigned to each trade item. For example, following is an image of barcode of books international standard number ISBN number. It is being fast replaced with quick response CR code. Quick response or QR code. A CR code or a QR code consists of black squares arranged in a square grid on a white background which can be ready by an imaging device such as camera until the image can be appropriately interpreted. The required data is then extracted from pattern that is present in both horizontal and vertical components of the image. I believe you understood. Let us move ahead. An important caveat about the foregoing discussion of the various perspective of contextualizing the BCK terminologies is necessary. We have stated these facets separately just to sake of simplicity and clarity. In practice, there will be a lot of overlap. Please read the emphasis of the titles Business, Many Facets of the Same Reality. The emphasis is on the same reality. For example, take a technical and commercial facets, whether inbound or outbound, order processing, inventory management, deliveries, payments, and associated terminologies would be common. Whether one is purchasing the raw materials or selling the goods, the signs and symbolages states above would be the same. Secondly, we have already stated the fact that BCK lexicon, like the BCK itself, is vast and ever evolving and expanding. You may focus on the terms mentioned in the BCK material, thus far chapter 1 to 5 and the terms mentioned in the present chapter. Finally, we have clubbed finance, stock, commodity market terminologies for overcoming the overlap and utilized the other business terminologies for including those terms that might pertain to HR, administrative, technical and other perspective not covered in the previous classifications. Finance, stock and commodity market terminology. finance, stock and commodity market terminology. We'll begin with agent. An agent An agent firm is said to be an agent when it acts on behalf of the client, acts on behalf of the client in buying or purchasing of shares. At no point of time in the entire transaction, the agent will own the shares. So the shares will be owned by the client only, but agent would be a person who will buy or sell shares on behalf of the client or as per the directives given by the client. I believe you understood. Let us continue. Amortize. To amortize is to charge a regular portion of the expenditure over a fixed period of time. For example, if something cost of 1 lakh rupee and is to be amortized over 10 years, the financial reports will show an expense of 10,000 per year for 10 years. That is rupee 1 lakh divided by 10 years. So per year the amortization expense would be 10,000. Amortization expense rupee 10,000 per year. I believe you understood. Let us continue. Annuity due. An annuity whose payments occur at the beginning of each period. An annuity, regular payment whose payment occur at the beginning of each period. Annuity, a series of payments of an equal amount at fixed intervals for a specified number of period. Example, say 2 years, 5 years. A series of equal payments, equal amount at fixed interval for a specified number of periods. Next, appreciation. Appreciation is an increase in value. If a machine cost 5 lakh last year and is now worth 7 lakh, it has appreciated by 2 lakhs. Arbitrage. Next is arbitrage. Arbitrage is the simultaneous purchase and sale of two identical commodities or instruments. This simultaneous sale and purchase is done in order to take advantage of the price variations in two different markets. For example, purchase of gold in one nation and the simultaneous sale in other. Assets. Asset means an economic resource that is expected to be benefit in the future. Probable future economic benefits obtained as a result of past transaction or events. Anything of value to which the firm has a legal claim. Any owned tangible or intangible object having economic value useful to the owner. In other words, an asset may be physical property such as a building, an object such as the stock certificate, or maybe the right such as the right to use the patented process. Intangible assets. These can be current assets. Current assets are those assets that can be expected to turn into cash within a year or less. For example, cash, marketable securities, account receivable, inventory. What are fixed assets? Fixed assets are also known as non-current assets. Fixed assets cannot be quickly turned into cash without interfering with business operations. These are valuable items that last more than 1 year, say 5 years. For example, land, buildings, machineries, vehicle, equipment, furniture, and long-term investments. The next is intangible assets. Intangible assets are the items such as patents, copyrights, trademarks, and other kinds of rights or things of value to a company which are not physical objects. Often they do not appear on the financial reports. Ask offer. The lowest price at which the owner is willing to sell his securities is known as offer price or ask price. Audit. Audit is a careful review of financial records of an organization to verify the accuracy of books of accounts, accuracy of stock, or accuracy of any internal control system. This is known as audit. Bad debt. The bad debts are amounts owed to a company that are not going to be paid. An amount receivable becomes a bad debt when it is recognized that it won't be paid. Sometimes bad debts are written off when recognized. Next, balance sheet. Balance sheet is a statement of financial position of a company at a single specific time, often at the close of business, on the last day of the month, quarter, or year. The balance sheet normally lists all assets on the left side or top, while liabilities and capitals are listed on the right side or bottom. Bond. Bond is a type of long-term promissory note. Bond can either be registered in the owner's name or are issued as a bearer instrument. It is a written record of debt payable in the future. The bond shows amount of debt, due date, and interest rate. The next is book value. Book value means total assets minus total liabilities. Book value also means that the value of the assets as recorded on the company's books or financial reports. Book value is often different than the true value. It may be more or less. So market value could be more or could be less than book value. Break even point. Break even point is it's a no profit no loss situation. The cost is equal to revenue at this time, at this point. It is the amount of revenue of sales which is exactly equals to the amount of expenses. Break even point is often expressed in terms of number of units that must be sold to produce revenues exactly equal to the expense. Revenue exactly equal to the expense is known as break-even point. Sales above the break-even point produces a profit and below produces a loss. The next terminology is budget. Budget is a detailed plan for the future, usually expressed in the formal quantitative terms. It is also a detailed plan for the acquisition and use of financial and other resources over a specified period of time. Next, bears. These stock market players are pessimist. They expect share prices or any other type of investment to fall. In a bear market, the general sentiment is that prices are going to be lower in future and majority of the dealers will sell as quickly as possible for fear of holding shares which diminish in value. Next is base price. This is the price of a security at the beginning of the trading day, which is used to determine the day minimum or maximum and the operational ranges of that day. Basket trading. Basket trading is a facility by which investors are in a position to buy, sell all 30 scrips of Sensex in the proportion of current weights in the Sensex in one go. Bear market, a market in which the stock prices are falling consistently, is known as the bear market. Next is Badla. Badla, carrying forward of transaction from one settlement period to the next without affecting delivery or payment. Badla involves carrying forward of a transaction from one settlement period to the next. The carry forward is done at an making up price, which is usually the closing price at the last day of the settlement. A Badla transaction attracts the following payments or charges: margin money specified by the stock exchange board, and the contango or Badla charges, interest charges determined on the basis of demand and supply forces. The next is blue chips. Blue chips are shares of large, well established and financially sound companies with an impressive record of earnings and dividends. Generally, blue chip shares provide low to moderate current yield and moderate to high capital gains yield. The price volatility of such share is moderate. Next is beta. It is a The next is beta. It is a measurement of relationship of stock prices of any particular stock and the movement of whole market. Beta denotes risk. Beta is a risk element or a risk factor. Next is bid. It is the highest price a buyer is willing to pay for the stock. It is the opposite of ask or offer price. Next, bonds. It is a promissory note issued by the companies or government to its buyers. It speaks about the specified amount held for a specified time period by the buyer. Next is broker or brokerage firm. A registered securities firm are called broker or brokerage firm. Brokers act as an advisor for purchase and sale of listed stocks. They do not own the securities at any point of time, but they charge a commission of their service. Bull market, a market in which the stock prices is increasingly consistently. Business day, days on which the stock market are open, that is Monday to Friday excluding public holidays, are known as business days. Call. What is call? The demand by a company or any other issuer of shares for payment. It may be the demand for full payment on due date, such as, for example, with a right issue. It may alternatively be the demand for further payments when the total amount is payable by installments. A call by a company should not be confused with call option. Call and call option is two different things. Next is bid and offer. Bid is the price at which the market maker buys from the investor, and the offer is the price at which he offers to sell the stock to the investor. The offer is higher than the bid. Next is bonus. A free allotment of shares made in proportion to existing shares out of accumulated reserve. A bonus share does not constitute additional wealth to shareholders. It merely signifies recapitalization of reserves into equity capital. However, the expectation of bonus share has a bullish impact on market sentiments and causes share price to go up. Next is book closure. Dates between which a company keeps its register of members closed for updating prior to payment of dividend or issue of new shares or debentures is known as book closure. The next is brokerage. Brokerage is the commission charged by the broker. The maximum brokerage chargeable is determined by the SEBI, that is Securities Exchange Board of India. The term bull. A bull is one which expects a rise in the price so that he can later sell at a higher price. Business risk. Next terminology is business risk. The riskiness inherent in the firm's operation, for it uses no debt. The next term is buyer. The trading member who has placed the order for the purchase of the securities is known as buyer. Next is call option. An option that is given to investor the right but not obligation to buy a particular stock at a specified price within a specified period. Next is close price. The final price at which the stock is traded on a given particular trading day is known as the close price. What is capital budgeting or investment decision? The process of planning expenditure on assets whose cash flows are expected to extend beyond 1 year is known as capital budgeting. Next is capital gain yield. What is known as capital gain yield? The capital gain during a given period divided by the beginning price. Capital markets. The financial markets for stocks and for intermediate or long-term debt. This is known as capital market. What is cash budget? Cash budget is a table showing cash flows, cash inflow and cash outflow, receipts, disbursement and cash balances. Receipts, payments, that is disbursement and cash balances for a firm over a specified period of time. It could be 3 months, 6 months or a year. Next, credit period. The length of time, credit period is a length of time for which the credit is granted to the debtor. Next is closing price. What is closing price? The trade price of a security at the end of the trading day based on the closing price of the security. The base price at the beginning of the next trading day is calculated. The next is commercial paper. Unsecured short-term promissory notes of large firms, usually issues in denominations of rupee 1 lakh or more and having an interest rate somewhat below the prime of lending rate of commercial bank. Commodities. Product used for commerce that are traded as a separate authorized commodities platform. Commodities include agricultural products and natural resources. Next is convertible securities. A security that could be bond, debenture, preferred stock by an issuer that can be converted into other securities of that issuer are known as convertible securities. The conversion usually occurs at an option of the holder of the security, but it may occur at the option of the issuer. Next is consolidation. Next is consolidation. Business combinations of two or more entities that occurs when the entities transfer all of their net assets to a newer entity created for that purpose. This is known as consolidation. Business combination of two or more entities that occurs when the entities transfer all of their net assets to a new entity created for that purpose is known as consolidation. Next is creditors. These are people or organization you owe money to any of the particular time. The value of the creditors is included in the published accounts. Creditors. These are the people or organization you owe money to at any particular time. The value of the creditors is included in the published accounts. Next is debentures. A debenture, a type of debt instrument that is not secured by a physical asset or collateral, that is unsecured. Debenture are backed by only by general credit worthiness and reputation of the issuer. A debenture is an unsecured form of investment. Unsecured debentures. Unsecured investment. Debtors. Next is debtors. Although debtors are considered as an asset, if you are owed a vast amount, this might indicate problems collecting monies owed and possible cash flow difficulties in the business. A debtor is a company or individual who owes money. Next is defensive stock, a stock that provides constant dividends and stable earnings even in the periods of economic downturn. Defensive stock, that is, even in the extreme critical situations of stock market, these companies continue to pay the dividend at a constant rate. Next is depreciation. Depreciation is a way of spreading the cost of an asset over its expected useful economic life. It is an expense allowance made for wear and tear on an asset over its estimated useful life. It is an expense that is supposed to reflect the loss if in value of a fixed asset. For example, if a machine will completely wear out after 10 years use, the cost of the machine is charged as an expense over the 10 years life rather than all at once when the machine is purchased. Straight line depreciation charges the same amount to expense each year. Accelerated depreciation charges more to expense in early years, less in later years. Depreciation is an accounting expense and it is to be shown in the profit and loss account as an expense. But depreciation is a non-cash expense. Depreciation is a non-cash expense. Non-cash expense. The next is derivatives, a security whose price is derived from one or more underlying asset. The most common underlying asset include stock, bonds, commodities, currencies, interest rate and market indexes. The next point is diversification. Diversification. Reducing the investment risk by purchasing shares of different companies operating in different sectors. The process is known as diversification or diversification of risk. The next is dividend. A portion of the company's earning decided to pay to its shareholders in return to their investments. It is usually declared as a percentage of current share price or some specified rupee value. usually decided by the board of directors of the company. This is known as dividend. Dividend is generally an annual payments on on shares to the shareholders. Next is equity, that is net worth. The capital supplied by common stockholders, common stock, paid in capital, retained earning, and occasionally certain reserves. Total equity is common equity plus preferred stock. The next is exchange rate. The number of units of given currency that can be purchased for 1 unit of another currency is known as exchange rate. The next point is face value. The next point is face value. Face value, it is the cash denomination or the amount of money the holder of the individual security is going to earn from the issuer of the security at the time of maturity. It is also known as par value or nominal value. Par value, nominal value, face value. Next is financial instrument. Financial instrument. A financial instrument is anything that ranges from cash, deed, negotiable instrument, or for that matter, any written and authenticated evidence that shows the existence of a transaction or agreement. The next is financial intermediary. A financial intermediary is basically a party or person who acts as a link between a provider who provides securities and the user who purchases the securities. Share brokers and almost all the banks are the best example of financial intermediaries. Let us move ahead. Let us move ahead now. Government bonds. A government bond, which is also known as government security, is basically any security that is held with the government and has the highest possible rate of interest. Next, hedge. Hedge is a strategy that is used to minimize the risk. To minimize the risk, that is to hedge, of a particular investment and maximize the returns of an investment. A hedge strategy is most of the times implemented with the help of hedge fund. The term has been written from the banker's point of view and may be interpreted differently in the field of financial and commodity market. Next is holding period. The holding period is the time duration during which a capital asset is held, owned by an individual or corporation. The holding period is taken into consideration while pledging the asset as an collateral. Income, stock income, a security which has a solid record of dividend payments and offers the dividend higher than the common stock. Next, the meaning of index. Next point is index. A index is a statistical measure of change in the economy or security market. Such indices have their own calculation methodology and are usually measured as a percentage change in the base value over a period of time. Next is IPO, initial public offering. A company figure, a company first issue of shares to general public. IPOs are issued by smaller, younger companies seeking fund for expansion and growth. But large companies also practice this to become publicly traded companies. Next is internet trading. Internet trading is a platform with internet as a medium. Internet trading execution takes place through order routing system, which will route traders order to exchange trading system. Thus, trading traders sitting in any part of the world can be able to trade using their broker's internet trading system. The Securities and Exchange Board of India (SEBI) approved internet trading on January 2000. Today, internet trading is possible in National Stock Exchange, Bombay Stock Exchange, and other stock exchanges. Limit order: an order to buy or sell a share at a specified price. The order will be executed only at a specified limit price, or even better, a limit order sets a minimum price the seller is willing to accept and maximum price the buyer is willing to pay for it. This is known as limit order. Next is liquidation. A liquidation occurs when the assets of a division are sold off piecemeal rather than an operating entity. Next is listing stocks. The shares of a company that are traded on the stock exchange. The company has to pay fees to the listed in the stock exchange to be listed in the stock exchange and abide by the regulations of the stock exchange to maintain the listing privileges. Next is market capitalization. The total value in rupee of all of company's outstanding shares. It is calculated by multiplying all the outstanding shares and the current market price of one share. It determines the company's size in terms of wealth. Next is mutual fund, a pool of money managed by experts by investing in stocks, bonds, and other securities with the objective of improving their savings. These experts will create a diversified diversified portfolio from these funds. One-sided market, a market that has only potential sellers or only potential buyers, but not both, is known as one-sided market. OTM, out of money. For call options, this means that stock prices is below the strike price. For put options, this means that stock prices is above the strike price. The price of out of the money options consist entirely of time value. Next is portfolio. Holding of an individual or institutions, a portfolio may include various types of securities of different companies operating in different sectors. Pre-opening session. The pre-open session is of duration of 15 minutes from 9 a.m. to 9:15 a.m. In pre-open session order entry, the modification and cancellation takes place. Next, PE ratio, that is price earning ratio. The market price of a share of stock divided by the earnings, that is profit per share. PE ratio can vary from sky high to dismally low but may not reflect the true value of the company. Next is put option, an option that gives an investor the right to sell a particular stock at a stated price within a specified time period. Put option is purchased by those who believe that particular stock price is going to fall down than the stated price. Next is return on investment. Return on investment is a measure of the effectiveness and efficiency with which managers use the resource available to them, expressed as a percentage. Return on equity is usually net profits after taxes divided by the shareholders' equity. Return on invested capital is usually net profit net profit after taxes plus interest paid on long-term debt divided by the equity plus the long-term debt. Return on assets used is usually the operating profit divided by the asset used to produce the profits. Typically used the evaluate divisions or subsidiaries. Different companies and different industries have different return on investments. Next is risk. A portable chance of investment, actual returns will be reduced then as calculated. A probable chance of investment, actual returns will be reduced then as calculated. Risk is usually measured by calculating the standard deviation of a historical price returns. Standard deviation is directly proportional to a degree of risk associated. I believe you understood till here. The next point is securities. A transferable certificate of ownership of investment in products such as stocks, bonds, future contracts, and options which an individual holds. Strike price, the price at which the holder of an option can buy in case of call option or sell in case of put option the securities they hold when the option is executed. Next is stock, a certificate or electronic or other record that indicates ownership of a portion of a corporation, a share of stock. Preferred stock promises its owner a dividend that is usually fixed in amount or percent. Preferred shareholders. Preferred shareholder get paid first out of any profits. They have preference. Common stock has no preference and no fixed rate of return. Stock also means the stock of goods, the stock in hand, the inventory of the company, etc. Next is stock split. An attempt to increase the number of outstanding shares of a company by splitting the existing shares is known as stock split. It is usually done to increase the availability of shares in the market. The usual split ratio is 2:1 or 3:1. That is, one share is split into two parts or three shares. Next, thin market. A market in which there is comparatively low number of bids to buy and offer to sell. Since the number of transactions is low, the prices are very volatile. Trading sessions, the period of time stock market is open for trading for both sellers and buyers. Within this time frame, all the orders of the day must be placed. 9:15 a.m. to 3:30 p.m. Here, all the orders placed in pre-opening sessions are matched and executed. This time is known as trading sessions. Next is yield. It is a measure of return on investment in terms of percentage. Stock yield is calculated by dividing the current price of a share by annual dividend paid by a company for that share. For example, if the current price of a share is rupee 100 and the dividend is paid INR 5 per share annually, then the stock yield is 5%. Next is yield to call. The rate of return earned on a bond if it is called before its maturity date. It is known as yield to call. Next, ZCBs. ZCB, zero coupon bond. A bond that pays no annual interest but is sold at a discount below par, thus providing compensation to investors in the form of capital appreciation. Next is marketing terminology. Advertising campaign. What is advertising campaign? An organization's program of advertising activities over a particular period with specific aims. For example, an increase in the sales or awareness of a product. Next is advertising. Advertising is any paid form of non-personal presentation and promotion of an idea, goods, and services through mass media such as newspaper, magazines, televisions, and radio by an identified sponsor is known as advertising. Next, after sales services. The services received after the original goods and services have been paid for. Often, these services are a part of warranty or guarantee schemes associated with the product or services purchased. No extra payment is need to be given for after sale services if the product is in warranty or guarantee period. Next, agent. Agent is a part of distribution channel. An agent is effectively a wholesaler who represents the buyer or seller on a relatively permanent basis, performs only a few functions and does not take title of the goods. The title of the goods is with the consumer or client only. Next point is barriers to trade. Sometimes that makes trade between two countries more difficult or expensive. For example, a tax on imports is a barrier to trade. Next is barriers to entry or exit. Economic or other characteristics of a marketplace that makes it difficult for new firms to enter or exit. Examples include economies of scale, product differentiation, capital requirement, cost disadvantages other than size, access to distribution channel, government policy, etc. Benchmarking. Benchmarking is the process of comparing the product and services of a business against those of competitors in the market or leading businesses in other markets. In order to find ways of improving quality and performance, an analysis of competitor strength and weaknesses used to evaluate a firm's relative competitive position, opportunity, or improving the success or failure of achieving such improvements. Benchmarking. Next concept is brand equity. Brand equity refers to the value of a brand. Brand equity is based on the extent to which the brand has high brand loyalty, name awareness, perceived quality, and strong product association. Brand equity also includes other intangible assets such as patents, trademarks, channel relationships, etc. Next is brand loyalty. It is a strongly motivated and long-standing decision of a customer to purchase a particular product or service. Next is brand recognition. It is a customer awareness that a brand exists and is an alternative to purchase. Brand recognition. Next point, brand loyalty. It is a strongly motivated and long-standing decision of a customer to purchase a particular product or service only. Customers generally are brand loyal because they are satisfied with the brand, they are satisfied with the services offered by the company, they are satisfied with the product pricing, etc. Brand recognition. It is a customer's awareness that a brand exists and is an alternative to purchase. What is a brand? A brand is a specific type of product form. A brand represented by brand name, brand symbol, design, logo, packaging. It is identity of a particular product form that customers recognize as being different from others. Business model. A company's business model is management storyline for how the strategy will be a money maker. Business portfolio. A business portfolio is the collection of business and product that make up the business. Next, B2B, business to business, marketing activity directed from one business to another. This term is often shortened to B2B, business to business. Next, buying behavior. Buying behavior concerns the process that buyers go through when deciding whether or not to purchase goods or service. Buying behavior can be influenced by a variety of external factors, motivation, including marketing activity. The next concept is cash discount. A reduction in the price of a good given encourage to make the sale on cash basis. Next, competitive advantage. Advantage that a firm has over its competitor is known as competitive advantage. What is competitive position? The position that a firm has over or wishes to achieve within its industry as measured against the competition is known as competitive position. Next concept is conglomerate diversification, a strategy of growing a firm by acquiring other firms for investment purposes, usually little or no anticipated synergy with the acquired firm. What is consortium? Consortium is a combination of several companies working together for a particular purpose. For example, in order to buy something or build something is known as consortium. What is consumer market? Consumer markets are the markets for products and services brought by individuals or their own or family use. The next is corporate culture. Corporate culture refers to the company's values, beliefs, business principles, traditions, way of operating, and internal work environment. Next is cross-selling, using a customer's buying history to select them for related offers. For example, selling a car alarm and music systems to new car buyers. Next is customer demand. Consumer demand is a want for specific products supported by an ability and willingness to pay for it. Customer loyalty, feeling or attitude that inclined a customer either to return to a company, shop, or outlet to purchase there again or else to repurchase a particular product, service, or brand is known as customer loyalty. Customer need. A need is a basic requirement that an individual wishes to satisfy. Next point, customer satisfaction. Customer satisfaction, the provision of goods or service which fulfill the customer's expectation in terms of quality and service in relation to the price paid. Customer wants. A want is a desire for specific product or service to satisfy the underlying need. Differentiation, a marketing strategy aimed at ensuring the product and services have a unique element to allow them to stand out from the rest, is known as differentiation. Product differentiation basically. Next point is direct marketing. When a business and the non-profit organization NPO market their products, services, or causes directly to consumers based on consumer interest. Example include catalog and other postal mailing, telemarketing, text messages, emails, ad on mobile device and internet advertising. Next point is distribution channel. What is distribution channel? There is direct channel and indirect channel. The direct channel, generally the product reaches from the manufacturer to consumer directly, and an indirect channel, there is in between, there is a retailer, wholesaler, and middleman agent. The network of organization necessarily to distribute goods and services from the manufacturer to the consumer. The distribution channel therefore potentially consists of manufacturers, distributors, wholesalers, retailers and e-tailers. Next, diversify. A company increases the range of goods or services it produces and sells. Next point, e-commerce. The use of technologies such as internet, electronic data exchange, and industry extranets to streamline business transactions. Next point, economy of scale. A reduction in the cost through the larger operating units, spreading the fixed cost over large number of items is known as economies of scale. The benefits of large scale production. The next point is external environment. The condition and forces that define a firm's competitive position and influences its strategic options, also called competitive environment. Next point, FMCG, fast moving consumer goods. Fast moving consumer goods are those that sell in high volumes with low unit value and have fast consumer per repurchase. Example, soaps, toothpaste, hair oils, jam, ketchup, packaged juice, ready meals, baked beans, etc. The next point is forecasting. The process of estimating future demands by anticipating what buyers are likely to do under a given set of marketing conditions. For example, economic confidence, disposable income, pricing levels, etc. What is innovators? Try and understand. Innovators are those who adopt new products first. They are usually relatively young, lively, intelligent, socially and geographically mobile. They are often of high socio-economic groups. Next point is internal marketing. The process of eliciting support for a company and its activities among its own employees is in order to encourage them to promote its goals. The process can happen over a number of levels, from increasing awareness of individual products and marketing campaigns to explaining the overall business strategy. Next, what is joint venture? A third party commercial operating established by two or more firms to pursue a particular market resource supply or other business opportunity. It is created and operated for the benefit of the co-owners. This relationship between is known as joint venture. Next point, long-term objectives. A firm intended performance over a multi-year period of time usually includes measures such as competitive position, profitably, return on investment, technology leadership, employee relations and development, public responsibility, etc. Market development, a process of growing sales by offering existing product or new versions of them to new customer groups is known as market development. Next is market entry, the launch of a new product into a new or existing market. A different strategy is required depending on whether the product is an early or late entrant to the market. The first entrant usually has an automatic advantage, while later entrants need to demonstrate that their products are better, cheaper, and so on. Next, what is market leader? Market leader. The company that has control over a certain market is known as the market leader. Next, market positioning. A marketing strategy that will position a business product and service against those of its competitor in the minds of consumers is known as market positioning. Next point, market research. What is market research? The systematic gathering, recording, and analyzing of data about problems relating to the marketing of goods and services is known as marketing research. What is market segmentation? Dividing the consumers into groups based on the different consumer characteristics to deliver a specially designed advertisement that meets the characteristics as closely as possible. Market share. Market share can be defined as a percentage of all sales within a market that is held by one brand or product or company. Next, market targeting. Market targeting is the process of evaluating each market segment and selecting the more attractive segment to enter with a particular product or particular product line. What is marketing? Marketing is a science or art of exploring, creating, delivering value to satisfy the needs of the target market at a profit. Marketing identifies unfilled, unfulfilled needs and desires. It defines, measures, and quantifies the size of the identified market and the profit potential. It pinpoints which segment the company is capable of serving best, and it designs and promotes the appropriate product and services. Next point, marketing mix. It refers to the firm's marketing element. It is common to describe these elements in terms of four P's of marketing, that is product, price, place, promotion. For services, marketing usually three additional P's are referred, that is people, processes and physical evidence. Next is marketing plan. A detailed statement, usually prepared annually, of how a company's marketing mix will be used to achieve its market objectives. A plan is usually prepared following a marketing audit. Checking. Next point, what is mass marketing? When many consumer receives the same message from business and non-profit organizations through mass media such as broadcast, television, radio or newspaper, regardless of consumer interest, is known as mass marketing. What is merger? Merger is considered to be a process when two or more companies come together to expand their business operations. Idea in Vodafone is a latest example of merger. Mission, company's mission or mission statement, a unique purpose of the firm that sets it apart from firms of its type, identifies scope of operation including market, customer, product distribution, technology, in manner that reflects values and priorities of the firm's strategies. What is niche marketing? Niche marketing refers to the exploitation of comparatively small market segments by businesses that decide to concentrate their efforts. Niche segment exist in nearly all markets. For example, atta noodles for health conscious. Next is opportunities. Opportunities are any feature of the external environment. Opportunities are any feature of the external environment which creates conditions that a business can exploit to its advantage. If the business is successful in exploiting opportunities, then it will be better placed to achieve its objective. What is personal selling? Oral communication with potential buyer of the product with the intention of making a sale. The personal selling may focus initially on developing a relationship with the potential buyer but will always ultimately end with an attempt to close the sale. Personal selling. Next point, preemptive pricing. Preemptive pricing is a strategy involves setting low prices in order to discourage or deter potential new entrants to the supplier's market. Next is, what is price discrimination? Price discrimination occur when a firm charges a different price to different groups of customers for an identical goods or services for reason not associated with cost. Maybe this is because of the location of the consumer. For example, bottled water is priced differently in shopping malls and cinema halls, on railway stations and in normal market. Price discrimination. So this is an example of it. Next, price elasticity of demand. Price elasticity of demand measures the responsiveness of a change in demand of a product following a change in its own price. This is known as price elasticity of demand. Next is price sensitivity. Price sensitivity is the effect of change in price will have on customers. Next, what is price skimming? What is price skimming? Price skimming involves charging a relatively high price for a short time where a new innovative or much improved product is launched onto a market. I believe you understood. Next point, what is price? The price of a product may be seen as the financial expression of the value of that product. Publicity. Promotional activities designed to promote a business and its products by obtaining media coverage not paid for by the business is known as publicity. So publicity is free, advertisement is paid. Next, sales promotion. Sales promotion refers to activity designed to boost the sales of a product or service. It may include an advertising campaign, increased PR activity, a free sample campaign, arranging demonstrations or exhibitions, setting up compensation with attractive prices, temporary price reduction, door to door calling, telephone selling, personal letters, on other methods. Short-term objectives. Usually 1 year objectives, sometimes known as annual objectives. They often coincide with long-term objectives. They usually indicate the speed at which the managements want to organize to progress. Next, stakeholder. Stakeholder, a person, a group or business that has an interest in the outcome of the firm's operation is known as stakeholder. Strength. A skill. Strength is a skill, resource or other advantage that a firm has relative to its competitor that is important to serving the need of the customer in its marketplace. Next, target marketing. Reaching out to a group of customers sharing common consumer characteristics with the most appropriate advertisement. Next, telemarketing. Usually the telephone to contact individuals about the advertisers, products or service or to get support for a cause. What is test marketing? Test marketing occur when a new product is tested with a sample of customers or launched in a restricted geographical area to judge the consumer satisfaction or consumer's reaction. What is threat? Threat are any aspect of the external environment which cause problems and which may prevent achievement of objectives. Almost by definition, what presents a threat to one business offers an opportunity to other businesses. What is unique selling proposition, USP? A unique selling proposition is a customer benefit that no other product can claim. Weakness, a limitation of lack of skills, resources, capabilities that impedes a firm's effective performance is known as weakness. Banking terminology. The next point is acceptance. Acceptance, which is also known as banker's acceptance, is a signed instrument of acknowledgement that indicates the approval and acceptance of all terms and conditions of any agreement on behalf of the banker. It is very wide term that is used in context with the financial agreement and contracts. Next point is accepting house. An accepting house is a banking or finance organization that specializes in the service of acceptance and guarantee of bills of exchange. This organization specializes in two prominent functions, that is, facilitating the different negotiable instruments and merchant bankings. Next, account balance, the total amount of money in a particular bank account along with the debit or credit. The net amount is also termed as the amount or account balance. Next point, accrued interest. Accrued interest is the interest accumulated on an investment but is not yet paid. Often, accrued interest is also termed as interest receivable. Some banking books prefer it to call it as the interest that is earned but not yet paid by the bank. Next, administered rates. Administered rates are the rates of interest which can be changed contractually by lender. In some cases, these rates can also be changed by the depositor and also the payee. The laws and the provisions that monitor the concept of administered rates differ in each just jurisdiction. Next, American Depository Receipt ADR. American Depository Receipt is also known as ADRs, are depository receipts which are equal to a specific number of shares of company that have been issued in a foreign country. American depository receipts are traded only in the United States of America. Similar mechanism exists for other countries also. What is annuities? Annuities are contracts that guarantee income or return in exchange of huge sum of money that is deposited either at the same time or is paid with the help of periodic payments. Some of the common types of annuities include deferred, fixed, immediate or variable variance. Next point, automatic clearing house. An automated clearing house is nationwide electronic clearing house that monitors and administers the process of check and fund clearance between the banks. It is an electronic system and thus minimizes the human work of process of clearance. It distributes credit and debit balances automatically. Next, automated teller machine ATM. Automated teller machine ATM. Automated teller machines are basically used to conduct transaction with the bank electronically. The automated teller machine is an excellent example of integration of computers and electronics into the field of banking. Next, balance transfer. A balance transfer is a repayment of the credit debt with the help of another source of credit. In some cases, balance transfer also refers to transfer of funds from one account to another. Next is bank account. A bank account is a account held by a person with a bank with the help of which the account holders can deposit, safeguard his money, earn interest, and also make check payments. Next, what is bank rate? It is the interest rate at which the central bank, in the discharge of its function as bankers bank, lends to the commercial bank, since this lending may be in the form of discounting of the securities pledged. It is also called the discount rate. Next point is basis point. Basis point, it is a measure of change in financial parameters such as interest, stock indices and market rates. It is 1 upon 1000 of 1%. 25 basis points means 0.25. 0.25%. Bridge financing, also known as gap financing. Bridge financing is a loan where the time and cash flow between a short-term loan and a long-term loan is filled up. Bridge financing begins at the end of the time period of the first loan and ends with the start of the time period of the second loan, thereby bidding the gap between two loans. It is also known as gap financing. Next, bounced check. What is a bounced check? A dishonored check. A bounced check is nothing but an ordinary check that has bank can refuse to encash or pay because of the fact that there is no sufficient finances in the bank of the originator or drawer of the check, or some other valid reason. Maybe the signature is not matching. Next, cap. A cap a cap is a limit that regulates the increase or decrease in the rate of interest and installments of an adjustable rate mortgage. Next, cashier check. The cashier check is drawn by a bank or its own name to many payments other than organizations, banks, corporations, or even individuals. Cash reserve. The cash reserve is the total amount of cash that is present in the bank account and can also be withdrawn immediately. Next is certificate of deposit COD. The certificate of deposit is a certificate of saving deposit that promises the depositor the sum back along with appropriate interest. Check. A check is a negotiable instrument that instructs the bank to pay a particular amount of money from the writer's bank to the receiver of the check. Next point is, what is clearing? Clearing of a check is basically a function that is executed at the clearing house when all amount of check is subtracted from the payer's account and then added to the payee's account. Next point, clearing house. A clearing house is a place where the representative of the different banks meet for confirming and clearing all the checks and balances of each other. The clearing house in most countries across the world is managed by the central bank. In India, the clearing house is managed by the Reserve Bank of India. What is compound interest? Compound interest is the interest that is compounded on the sum of money that is deposited. The compound interest, unlike simple interest, is calculated by taking into consideration the principal amount and the accumulated interest. What is a debit card? A debit card is an instrument that was developed with digital cash technology and is used when a consumer makes the payments first to the credit card company and then swipes the card. The debit card operates in the exact opposite manner of a credit card. Next point, deposit slip. What is deposit slip? A deposit slip is a bill of itemized nature and depicts the amount of paper money, coins, and the thick numbers and the check numbers that are being deposited into the bank. It could be also termed as counterfoil. Counterfoil of cash oblique check deposited in bank. I believe you understood till here. This is an example of illustrative picture of counterfoil or deposit slip. Next point, depositor. The person who deposits money into the bank account is known as depositor. Debt settlement. Debt settlement. Debt settlement is a procedure wherein a person in debt negotiates the price with the lender of the bank in order to reduce the installment and rate of repayment and ensure a fast and guaranteed repayment. Debt repayment. Debt repayment is the total process repayment of a debt along with the interest. Sometimes the consolidation that is provided is also included in debt repayment. Next is debt recovery. Debt recovery is the process that is initiated by the banks and lending institutions by various procedures like debt settlement or selling of collaterals. E-cash, also known as electronic cash or digital cash. E-cash is a technology where the banking organizations resort to the use of electronic, computer, internet and other networks to execute transactions and transfer funds. Early withdrawal penalty. An early withdrawal penalty is basically a penalty that is levied by the bank because of an early withdrawal of fixed investment or fixed deposit by an investor. There can be several types of early withdrawals penalties like forfeiting the promised interest, etc. Expiration date. This term indicates the validity, the invalidity of a financial document or instrument after a specified period of time. What is education loan? An education loan is also known as student's loan, is specifically meant to provide forth borrower's expenditure towards education. In the majority of countries, education loan tend to have a low rate of interest. The period of repayment also start after the completion period of the loan. Next, guarantor. A guarantor is a creator of trust. who takes the responsibility of the repayment of the loan and is also in some cases liable or equally responsible for the repayment of the loan. Next, installment contract. An installment contract is a contract where the borrower, who is also the purchaser, pays a series of installment that includes the interest of the principal amount. Interest or interest rate. Interest is a charge that is paid by any borrower or debtor for the use of money, which is calculated on the basis of rate of interest, time period of the debt, and the principal amount that was borrowed. Interest is sometimes also titled as cost of credit. Interest rate is the percentage of principal amount that is paid as an interest for the use of money. Next point, internet banking. What is internet banking? Internet banking is a system wherein the customers can conduct their transactions through the internet. This kind of banking is also known as e-banking or online banking. The e-banking portal of ICICI Bank is illustrated over here. What is LC? That is letter of credit. A document issued by the bank on behalf of the buyer or the importer stating its commitment to pay a third party, that is a seller or exporter, a specific amount for the purchase of goods by its customer who is a buyer. A document issued by a bank on behalf of the buyer or the importer stating its commitment to pay to the third party, that is a seller or exporter, a specific amount for the purchase of the goods by its customer who is a buyer. The seller has to meet the conditions given in the document and submit the relevant document in order to receive the payment. Letter of credit are mainly used in international trade transactions of huge amounts wherein the consumer and the supplier live in different countries. Next, what is lock-in period? A guarantee given by the lender that there is no change in the quoted mortgage rates for a specified period of time, which is called the lock-in period. What is mortgage? A mortgage is a legal agreement between the lender and the borrower where the real estate property is used as collateral for the loan in order to secure the payment of the debt. According to the mortgage agreement, the lender of the loan is authorized to confiscate the property the moment the borrower stops paying the installment. Next, maturity. The term maturity is used to indicate the end of investment period of any fixed investment or security. After maturity, the investor is repaid the invested amount along with the interest that has been accumulated. For example, on the maturity of 1 year fixed deposit, the invested sum along with the accumulated interest is transferred by the bank to the account of the investor. Next, what is market value? Market value is the value at which the demand of consumers and the supply of the manufacturers decide the price of the commodity or service. The market value is the equilibrium point on the supply of demand graph where the demand and supply curves meet. Thus, market value is decided on the basis of number people who demand a commodity and the number of commodities that the seller are capable of selling. Next, online banking. The assessing of bank information accounts and transactions with the help of computer through the financial institutions website on the internet is called online banking. It is also called internet banking or e-banking. Next, what is overdraft? It is a check or rather than an amount of check which is above the balance available in the account of a payer. What is payee? Payee is a person to whom the money is to be paid by the payer. Payer. Payer is a person who pays the money to the payee. Next, personal identification number, PIN. Personal identification number or PIN is a secret code of numbers and alphabets given to customers to perform transactions through an automatic teller machine or ATM. Next, what is repo rate? The rate at which the banks borrow money from RBI, against which the pledging or sale of government securities to RBI is known as repo rate. Repo rate is short term of repurchase rate. Generally, these rates are of short duration up to 2 weeks. Repo rates differs from bank rate with respect to the time horizon. Repo rate is a short term measure and it refers to short term loans. On the other hand, bank rate is a long term measure and governed by the long term monetary policies by RBI. What is reverse repo rate? It is a rate of interest offered by the Reserve Bank of India when banks deposit their surplus fund with the RBI for shorter period of time. What is smart cards? Unlike debit or credit cards with magnetic strip, smart card possesses a computer chip which is used for data storage, processing and identification. Syndicated loan, a large, a very large loan extended by a group of small banks to a single borrower, especially corporate borrower. In most cases of syndicated loan, there will be a lead bank which provides a part of the loan and syndicates the balance amount to other banks. What is time deposit? A kind of bank deposit which is investor is not able to withdraw before a fixed time period making the deposit is known as time deposit. Value at risk, VAR, the sum or portion of value that is at stake of subject to loss from variations in prevalent interest rates. Next, wholesale banking. Wholesale banking is a term used for banks which offer services to other corporate entities, large institutions, and other financial institutions. Zero balance account, a bank account which does not require any minimum balance in term of zero balance account. Next is zero down payment mortgage. Zero down payment mortgage is a type of mortgage given to a buyer who does not make any down payment while borrowing. The mortgage buyer borrows the amount at the entire purchase price. Example, Jan Dhan account. Other business terminology. Acquisition. When one organization takes over the other organization and controls all the business operation is known as acquisition. In this process of acquisition, one financially strong organization overpowers the weaker one. What is bankruptcy? A bankruptcy refers to economic insolvency wherein the person's assets are liquidated to pay off the liabilities with the help of bankruptcy, trustee or a court of law. What is bottom line? In plain English, bottom line means the most important fact or aspect of anything. In BCK, it may be defined as the firm's income after all expenses have been deducted from the revenue, and these expenses include interest charges paid on loans, general and administrative cost and income taxes. In simpler words, it is the same thing as net profits for these mattered the most for the owners of the firm. In today's context, a firm's performance is evaluated not on the basis of such economic performance as net profits alone, but also on the basis of contribution to the communities and the conservation of the environment. See triple bottom line. Next, business environment. This is a set of all the variable external to the firm but influence its decision making and in turn are also influenced by it. What is business facilitators? These are individuals, organizations, or institutions and all other arrangements that ease the setting up of operating an existing form from business. Next, corporate form of business organization. These are the forms of business organization wherein the eyes of law, the business entity is distinct from the owners. It can own the assets and owe to others as an artificial legal person. Thus, the liability of business owners can be limited to a predetermined amount. Company is the ideal representation of the corporate forms of business organization. Next, corporate governance. It is a system of overseeing the affairs of the corporation to ensure that they are conducted in an ethical manner and as per the provisions of the law. The mechanism of corporate governance includes the board of directors who appoint, oversee, and reward the management team, independent audit of the accounts of the company, reporting of the performance of the market, that is stock exchanges and business media, and all these are examples of system of corporate governance. Next is electronic commerce, e-commerce. It broadly refers to the internet and mobile telephony based applications for conducting business and commerce. The latter, more precisely, is known as mobile commerce. It includes not only such pure e-commerce businesses as Amazon, but also includes such business functions as e-marketing, internet marketing, etc. Usually, a typically e-commerce retailing will have an order placement, tracking and delivery end, as well as online payment end. Next is electronic filing. Electronic filing is a system of filing information required by regulators, government and other electronically. In taxation, it is a method of filing of tax returns, ITRs, income tax return, GST returns, goods and service tax returns, tax forms on the internet. Next is globalization. It is a systematic process of removing the barrier to international trade in goods and services and the international flow of capital. Some people argue that it should include barrier-free movement of labor as well. Collectively, all this results in a greater integration of countries' economy with the economy of the rest of the world. Next point is goodwill. Goodwill in accounting is the difference between what a company pays when it buys the assets of another company and the book value of those assets. Sometimes real goods is the company's goods reputation, the loyalty of the customer, and so on. Infrastructure, it means the basic facilities, example, building road, power supplies needed for the operation of a society or enterprise. For example, the firm infrastructure would comprise its factories, offices, warehouse, etc. Next, joint product and byproduct. Joint product represents two or more products separated in the course of the same processing operation, usually requiring further processing, each product being in such proportion that no single product can be designed as a major product. For example, in the oil industry, gasoline fuel, oil lubricant, paraffin, coal tar, asphalt and kerosene are all products produced from crude petroleum, but byproducts are defined as products recovered from material discarded in the main process or from the production of some major products where the material value is to be considered at the time of severance from the main product. Thus, byproducts emerge as a result of processing operation of another product, or they are produced from the scrap or waste of materials of a process. For example, molasses in sugar industry. Next is liberalization. What is liberalization? It refers to systematic process of easing the government's control over a private sector activity. It is often contrasted with the license and permit era where the businesses had to obtain government licenses and permits to start or grow a business. Liberalization is one of the three pillars of the new economic policy of the government since 1990s. The other two pillars are privatization and globalization. This is why the new economic policy is also known as LPG or GPL, that is, liberalization, privatization, and globalization. Next point, logistics. Logistics, it is a commercial activity implying moving of supplies to the production facilities and goods and services to the respective markets. Inbound logistics imply the movement of input and the outbound logistics means the movement of outputs. The next is merger. When two or more companies come together to increase their strength and financial gains, along with breaking the trade barriers of a newly created entity, is known as merger. Next, mission. A company's mission statement is typically focused on its present business scope, who we are, and what we do. Mission statements broadly described as organization's present capabilities, customer focus, activities, and business makeups. Next example, pestle. It is a mnemonic, that is a pattern of letters that helps him remembering the various elements of the macroeconomic environment of business. In its expanded form, it denotes P for political, E for economic, S for social, T for technological, L for legal, and E for environment, that is the natural environment. Next point is proprietary forms of business organization. These are the forms of business organizations where the law does not distinguish between the business as a separate entity distinct from its owners. Consequently, the liabilities of the business are considered as the personal liabilities of the owners. Sole proprietor and the partnership may be cited as the best representative examples of the proprietary form of business organizations. What is privatization? It is a systematic process of dispensing with the state ownership of business enterprises. One way of doing this could be the way of listing the shares of public corporations on the stock exchanges. Next point, return and risk. These are the two sides of the business outcomes, particularly for its owners and generally for all investment individuals and businesses invest their resources in expectation of the return or reward that may be simply called profits. However, these expectations may not always realize at all, or the fully non-partial realization of expectation is called risk. In certain investments, such risks are non-existent or so low as to label these risks as free investment. For example, if a person deposits her saving in the savings bank account for recurring deposits account or a fixed deposit account of a bank and the returns are almost assured, but most of the investment, more so investment in the business entail risk. Thus, those who undertake the risk expect the commensurate return as well. Thus, the cliche higher the risk, higher the return. Next, what is sustainable development? Sustainable development is a broader measure of development of a country that includes economic parameters such as income and non-income income parameter, such as social equity and ecological balances. It emphasizes simultaneous attention to economic growth, social equity and environmental conservation. It is the macro context of business triple bottom line. In another sense, it also used at individual business organizations. Term insurance, it is the insurance for a certain time period which provides for no defrayal to the insured individual excluding losses during the period and that becomes null option its expiration. Next is triple bottom line. It is the BCK philosophy that promotes the belief and evaluates the business performance on the basis of attainment of profits. Care of people and care of the planet are equally important. The equal emphasis of these triple that P's, that is profit, people and planet, is known as triple bottom line TBL. This idea of the macro level corresponds to more evolved notion of the development of country's economy, society and ecology. See sustainable development. Next is turn around. A turn around is the financial recovery of the company that has been performing poorly for an extended time. To effect a turnaround, a company must acknowledge and identify its problems, consider changes in management and develops and implement a problem solving strategy. I believe you understood till here. Let's move ahead. The next is vision. A strategic vision is a roadmap of the company's future, providing the specifics about the technology and customer focus, and thus the geographic and product markets to be pursued, and the capabilities it plans to develop, and the kind of company that management is trying to create. Next, whole life insurance. A whole life insurance is a contract between the insurer and the policy owner. Insurer is the insurance company and the policy owner, that the insurer will pay a sum of money on the occurrence of event mentioned in the policy to be insured. That is basically known as the insurance premium. Its concept wherein the insurer mitigates the loss caused by the insured on the basis of certain principles of insurance. Whole life insurance plans. I believe you understood till here. I believe you understood till here. We are stopping here. We are stopping here. Thank you. Thank you.